Thank you, Chairman. The secondary mortgage market depends on broad investor confidence that mortgage credit risk is being priced, managed, and distributed responsibly. In the coming weeks, I plan, and I'm sure the Chairman's aware, we're going to be introducing legislation that would end the conservatorship of Fannie Mae, Freddie Mac, by codifying many of the reforms that have been accomplished the past few years, in particular, encouraging more credit risk transfers. Mr. Bright, thanks for being here today. From your perspective, would you agree that with the cap on their investment portfolios, increased capital standards, and the introduction of the credit risk transfers, Fannie and Freddie have become far less risky than prior to the financial crisis? And then how can we encourage more CRT further, how can we have that CRT further remove taxpayer risk and better utilize private capital?
So to answer your first question, undoubtedly, they're less risky. Much lower leverage, much stronger underwriting standards, much more oversight, and as you point out, the use of CRT as an insurance vehicle to protect against predefined losses. How can we encourage more? Well, you mentioned codifying reforms and legislation. I think there are a lot of reforms that have been done administratively that could use codification legislation and encouragement of them to continue to leverage that as a form of loss protection.
Very good. Let me ask you another question. Mr. Bright, one aspect of Fannie and Freddie that has not been addressed is the alarming increase in the conforming loan limits, which allows them to purchase mortgages over $1 million in high-cost areas. So what we're trying to do with the bill is tie increases in the loan limits to median income rather than the home price appreciation index, right? I know I'm getting into the weeds here, but so that would, in effect, probably put the rates on a different path and they would increase slower. Can you talk about how this change would bring in probably more capital, more private capital, to the mortgage market, as well as the benefits of that, I guess?
There's quite a bit of private capital on the sideline looking to get into the mortgage market. The PLS market is functioning well, and there's more capital to be deployed there. One regulatory change that I would hope you all would encourage would be the SEC to continue looking at amendments to the Reg AB2 framework, which has been in place since 2013 and has really limited the ability to have a public issuance market for mortgage-backed securities that aren't backed by the taxpayer. My understanding is the SEC is looking into it. I would encourage you to do that as well. Being mindful of time, there's a chart that I think speaks volumes, and it's a graph of home prices and a graph of loan limits and then a graph of income over the last 15 years, and you can see these lines. Home prices and loan limits goes up together. Incomes do not. That gap is a problem and is probably contributing to the affordability challenge.
Very good, thank you. Mr. Brooksmith, one core part of the bill that I'm working on would establish a utility model framework for Fannie and Freddie. Can you discuss how a utility kind of model, potentially using a return on equity band, could discourage Fannie and Freddie from expanding beyond their, I guess what you'd call their core mission?
Sure, we think that a model for a post-conservatorship Fannie Mae and Freddie Mac where their returns are targeted to a range of return on equity would make sense. We want it to be set enough so that there'll be interest in people buying their stock and having them be well-run companies, but with a cap so that they don't stray away from their chartered mission and get into the primary mortgage market, for instance.
Yeah, I mean, we're kind of in, that would be uncharted territory, so we're assuming, but you're confident that that's what the impact would be? Well, I think that
we think that Congress's involvement in any ultimate release would put guardrails in terms of what activities they could pursue, which would complement the utility model.
Very good. Thank you. I yield back, Chairman.